obviously fitting to start with Discovery's results in line with your trading update that you put out, profit up 24%. The big question is obviously Prue Health and what you are ultimately going to see in that territory. Questions being asked as to whether that business is going to go the same direction as the US business.
No, I certainly don't think so. I think that what we built at Prue Health is quite special. It's an amazingly strong franchise. I think the quality of clients coming in, the quality of new business, I think is phenomenal. I think the reality is that it's a market that requires a focus on certain issues, which I think during the year we did some fundamental restructuring in. The purchase of Standard Life Healthcare is a fundamental issue in terms of giving it scale and giving it negotiating power. In addition, work on the loss ratio, the expense base, all of that was done during this period that hasn't been felt at all. So in the next 6 months we'll see, I think, a dramatic improvement. But I think the business is quite special, and together with Prue Protect, it's an incredibly powerful footprint, I think, in the UK. So we're quite excited about it.
You've also been quoted as saying that with China, you obviously have that 20% stake in Ping An, and you're looking to increase that to 25% if the Chinese regulators allow you to do so. Is that going to be a big stumbling block in terms of increasing that stake?
I don't know, frankly. I think that the initial discussion was around 24.9%. That's how we started out. And when the regulator dealt with it, their view was it should be limited to 20%. If they're allowed to go above 20%, we'd like to buy up, but the fact is that's where the limit is at this point. So we have to abide by that. We're still going through that regulatory process right now, and we'll see where it lands.
Earlier I spoke to Risto Katola from Katola Research, and he was relatively ambivalent about the prospects in China and whether it was going to give you the growth that you are looking for. How would you like to respond to his skepticism?
I mean, obviously we're excited by the potential. I think we've been quite careful that it will take time. You know, it's a massive market, it will emerge over time. But the case for China, I think, is very compelling. You know, there are 80 million families above an income level where you'd expect private healthcare. And the statistic that amazes me is that 55% of all expenditure on healthcare is out of pocket, and only 7% is insured. So there's a massive insurance gap. The government, as part of its healthcare reforms, is promoting a health insurance, a robust health insurance industry that's not really there. And then Ping An itself as a partner is remarkable. I mean, it's one of the biggest companies in the world, 400,000 agents. So I think it would be short-sighted to think the opportunity is not dramatic. I mean, whether we can capitalize on it, I'm not sure, but we're fairly clear that I think the partner is exceptional, the market is exceptional, but it will take us time, I think, realistically. In
a Reuters interview earlier, you were quoted as saying that the two exciting markets for you are China and India. Are you investigating? You see the journalists jump on the bandwagon straight away. Are you already investigating opportunities in India?
Listen, we are continuously approached by different markets and different companies by potentials. The point I made was that I think, you know, I was asked about different markets in the world where we found interest. I think Asia is a particularly exciting market in healthcare right now. I think life insurance and the long-term savings market has moved. We've missed the boat to an extent, I think, in those markets. But I think private health insurance in Asia, you know, in markets like India and China, is just starting to move, you know. And the point I made is I think those are compelling markets, you know. It wasn't that we're looking, that we're doing anything. I mean, we have a lot of...
You've got to be careful of the journalists out there, Adrian. Patrick, let's bring you in here. The market loved these results. The stock closed up nearly 2%, 36 Rand. From a valuation perspective, what do you make of Discovery?
Yeah, look, it's a bit tricky. I mean, if you look at the story of Discovery, it's been that of very pacey growth over the last while. It's a well-run company. It's growth, and it's grown quite quickly compared to some of the bigger sort of laggards in the industry. So from a rating point of view, it has tended to trade at a slight premium to the other life companies. So one can say, well, maybe from that basis, it is fairly priced. But if you look at it as a standalone, I mean, I think there is, if they are able to bring some of the benefits into Prue Health and then get the Ping An side working also, I think there is a lot of growth that can be unleashed. In my view, I think unfortunately a lot of that is in the price, so it has to still come through for that to be sort of a leg up.
I had Etienne Nalbana Jacobs Millet saying directly after Risto Katola that he believes that you are backing, it doesn't matter how expensive Discovery Health is, but you are backing a very, very good management team and that you need to be invested in the stock. Your response, James, and obviously you're on the spot because Mr. Gore is sitting right there.
Sure, although I am a bit bigger than he is. So, it definitely does carry a premium, but it does carry a premium and isn't an expensive share. But you find that companies that carry a premium that are expensive for a reason. And they typically carry that premium because of excellent management within that, within the actual company. I do have two questions for Adrian, though, if I can put them to him
Please go
quickly.
ahead.
The move into China and even the mention of the India word, does that indicate perhaps a shift in overall strategy, maybe more towards the emerging markets and maybe away from the more mature markets?
No, I don't think it does. I think that I think we've been clear about the UK opportunity, and we're investing heavily and pushing very hard. I don't think we could have done more in this year that's just passed. I think that our best view intellectually is the power of Asia, how it's emerging. I'm sure it will have some of its wobbles, but there is a very strong case for how private healthcare is emerging, and I think that's, to me, quite exciting. I think our Vitality business in the US, we've had in a kind of incubator for some time. There is some real potential upside there, but it's a capital light, it's kind of an option on a market that might emerge. And the point we made in our presentation this morning was the capital allocation still at this point is 85% local. It has been that way for 5 years, and it actually looks like that going forward. So to an extent, I've been very careful about not exposing the organization to massive bets offshore, and being very careful about it. But I think what's interesting is that the partnership model we found works well. If you have the ability to attract a world-class partner and to work with them, we found that with the Prue, hopefully Ping On offers it, we're doing with Johnson & Johnson in the US. And Asia, incidentally, has that kind of propensity. You can't enter Asia on your own. Factually, you've got to partner someone. So there are some compelling reasons why intellectually it's intriguing to us. But right now, we are where we are. I don't see any kind of proclivity to the Asian market or whatever. There are real opportunities out there.
Leads me to my second question. When you look at going into the Asian markets, you talk about the lack of a sort of a private healthcare industry. Is that perhaps not a cultural issue, whereby most things are paid for out of pocket? Fine going into a market where the existing market exists for private healthcare and perhaps doing it better than anyone else does it. But is there not a risk in entering into a new market where the underlying market actually doesn't exist yet?
The market does exist. I mean, there's a very simple kind of top-up market where people are buying insurance in massive volumes about trying to top up sort of the social health insurance benefits to the actual cost. They're very crude kind of dread disease policies, those kind of benefits. So there's a very big market, and you're having the life insurers having huge amounts of business on that basis. And there's no doubt that is going to emerge into a more sophisticated market. On one hand, I say that. On the other, that's why I do think it will take time. I think these markets do develop, and I've learned that you underrate the cultural challenges to your detriment. You know what I'm saying? What you think works here is not going to work there. It takes time. And the point that we keep making is we're working with Ping On. I mean, they're experts in this stuff. We are not the executor. We are really there about kind of the intel inside. Putting the IP and putting the technology in. They understand, kind of the feet on the street, what's happening. So this will take time, but I think there is a lag between a market developing. It can take a number of years. But already, as I say, there's a vibrant insurance market in sort of a very crude top-up kind of policy.
Derek, you wanted to ask a question?
Yes. Well, firstly, just from my side, I mean, I think I commend the results. I'm very excited about the company. And again, obviously carrying a premium, it obviously carries that premium for a reason. But just to come off the growth story from the East at this stage, from a domestic point of view, do you find domestically the market rather saturated at the moment, or do you think there's still quite a lot of room for growth sitting within the South African boundaries and room to grow that within South Africa?
I think there's massive potential growth in South Africa for us. And that's why I say 85% of our capitals in the current plan will go here. On the life insurance side, we've grown, I think, very quickly. It's a competitive market. It's an oligopoly where if you can beat the others, there's a very big market out there. On the health side, it's interesting. We've had this argument about saturation and how big we are for a number of years, and yet this year we grew by nearly 50%. And I don't believe that's quite exceptional. I don't think you can repeat that easily. But having said that, the health market is big. We have 30% or thereabout of the entire market. Made the point that a 12% growth is 3% market share. I mean, you can do 10 years of that, before you get another 30%. So to an extent, I think there is significant growth for us. And then Discovery Invest, which is really just embryonic at this stage. It's really scratching, I think, at a very big market.
Profit.
Yeah, it did really well. To me, it was one of the stars of the show. But it really is just embryonic. So the growth for us, I think, is in all of those markets. But the truth of it is, like anything, I think you kind of moan about saturation when you're mediocre. That's the reality. If you're excellent and you're meeting customer needs, it's amazing how much business is out there. And just the point, we are not kind of, bamboozled by international stuff. The market here is big, If you show our figures of what we've done in Discovery Life to any company in the UK or the US, it's impressive. So we don't underrate the South African market, not for a bit, and that's why we're quite excited by it.
Pat, can I sneak in a question before you?
Okay.
Momentum Metropolitan, how is that going to shake up the landscape?
I don't know. I think Momentum is an exceptionally good company, and I think they'll do a good job in that process. Frankly, on the health insurance side, on the medical scheme side, I think it will be a force for good. What I think healthcare often lacks is rational, responsible players. You know what I'm saying? And I'm pretty sure Momentum Metropolitan will be a big block of rationality. You know, so to an extent, I actually welcome that, and I think they'll be hugely competitive. You know, I think it's good for customers. Frankly, we're up to the challenge, but it's good for customers.
Pat, these are all yours.
Yeah, just say, Adrian, on the current results, I mean, on the life side, it seems like there are some persistent issues there in terms of write-backs. Is it largely an in-house thing in terms of your sales force writing bad business, or is it a structural thing where you're looking at the market and looking at your customers and saying, well, maybe there is a need to make some adjustments going forward?
In reality, I think our lapse experience is probably lower than the rest of the industry. During this economic difficult time, we saw the lapse rate go up, and therefore what we did to the embedded value was to put a shock lapse assumption in, so write it down a bit. We felt it was prudent. The reality is that the business is outperforming those assumptions, and it's coming down quite dramatically. But ironically, structurally, I would argue that our lapse rates are much stickier. The persistency is better because this integration of Vitality and Discovery Health, we've seen probabilistically brings down lapse rates dramatically.
Okay.
James, we have time for one more question.
Yeah, one last question, and it's a non-financial question. It's an easy one. I've heard in Western culture, when you're sick, you pay your doctor. You go to your doctor and you pay him. I've heard that in Chinese culture, you pay him when you're well, and when you're not sick, you stop. And when you're sick, when you're not well, you stop paying him. Any truth to that?
I don't. I've heard those kind of things. The truth of it is, what I have seen in reality, when you go to a hospital and there's a gap, you pay. Right? And you go with your drip to the counter to make that bill, else they don't treat you. So with all those idiosyncrasies, my sense is reality will settle in and we'll be paying claims.